Well, it's really important. We had a conversation about personal loan with bad credit and no steady income. How do you actually convince a lender to approve you? If you want to hear more, I want you to stick around till the end.
One in a million, one in a million, one in a million. You know they're coming up to me, cause I'm just the kind of flower that's stinging in the beat, but the rhythms getting higher. Go, 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 go. One in a million, one in a million, one in a million, one in a million, one in a million.
Welcome back, folks, to another edition of the Awesome City Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee, or tea, or vodka, and let's roll. In today's conversation, I want to speak to you about personal loan with bad credit and no steady income. How do you actually convince a lender to approve you? Okay, so here are the steps. I want you to really follow our formula. It is a proven formula that we have been applying for 30 years. We have guiding our clients to use it, and it has worked fantastically. Okay, first thing first, liquidity. So you need to show that you currently have decent cash flows. You need to explain your inflows and outflows. Remember, simply because you have bad credit doesn't mean that you don't have cash flows. Simply because you have no steady income doesn't mean you don't have inflows of cash, right? It's important to really differentiate those two elements. Okay, and somebody can have a bad credit, they can have a bad credit score, but make a lot of cash anyway because they probably have dividend income. They probably have income from other sources that are legit, though. Where we have to really specify that it has to be legit. So it's really important to actually explain to the lender that you are generating cash flows, and cash flows are important because cash flows are going to be used. They're going to actually judge your ability to repay the loan based on the cash flows that you currently have. Okay, so please make sure that you explain your cash inflows and cash outflows. I mean, maybe you have side hustles that are just making you some money here and there, right? Or you probably actually have, let's say, you have an online store. I mean, you have something. You know, if you don't have steady income, it's fine, but you are having something. So when we look at your income, let's say on a quarterly basis, maybe you have income. Some folks have a seasonal income. In other words, they make a ton of cash during the holidays, for example. Or if you are a tax preparer, you probably make a lot of cash during January to April, when it's the tax season, right? So we have to think about cash inflows versus cash outflows. And when you subtract cash outflows from cash inflows, you have net cash flow. Okay. And everything, actually, if you want to convince a lender, you can just prepare something called a personal cash flow statements, so that you are able to actually show the lender, hey, listen, I'm making money. Actually, there are three financial statements, personal financial statements, but in your case, you want to actually show the cash flow statement. Number two, you actually have to demonstrate that you have legit sources of income. I briefly talked about that. Now I want to go a little deeper. See, again, I want to clarify something for you. Simply because you have no steady income doesn't mean you don't have income. It just means it is sporadic. It is not steady. It is not regular. It is not constant. Okay. You don't have a 9-to-5 job, maybe, where they pay you every 2 weeks or every month or every week. Okay. But if you have other sources of income, you need to demonstrate that to the lender. It has to be legit, as I said before. So we have besides earned income, which is the income that you earn from your day job, you can have also business income. Let's say you own a business, or you probably have you are a partner to a business. Okay, you have maybe interest income, boss. This could be a possibility. Okay, you are getting interest every now and then, or you have loaned money to third parties. Okay, or you are receiving dividend income. Okay, maybe this is kind of cool. Remember that dividend is what? It's money that is distributed as a result of owning shares of a company. Or you're probably generating rental income. Yeah, you probably are a real estate investor, right? And I mean, right now times are hard. Things are not really working well for you. But hey, listen, if you're making money, I would say legally, from one source or another, you have to tell the lender that. It's important, and it is part of a conversation you need to have. You can also mention your capital gains. Okay, this is money earned when you sell an investment, like stocks, for example. or maybe you are making money from royalties and licensing. Maybe you have a book right now on KDP on Amazon, and you're getting every month maybe 200 or 300 or 500, whatever it is. But the bottom line is, this is important for you to actually demonstrate to the lender that, hey, listen, I have income. I really have income. I want to make sure that you are able to count my income as part of the loan application process, as part of the underwriting process. Okay. And I may not have a job, a steady job, a regular 9 to 5. Yes. But I generate income, and I want you to actually account for that income when approving me. Okay, so when approving for a loan or when setting my loan amount, this is really important, because the lender is going to think about risk management. How do they cover their ass? How, they're looking at you as a high risk in terms of default, and they're thinking, how do we cover their ass? How do we cover our asses? And the third thing I want you to think about is DTI and CUR. Boss, if you have bad credit and no steady income, you need to be very careful about your credit utilization ratio. You got to be careful about your debt to income ratio. Okay, right off the bat, if you have no steady income, you want to stop getting more loans anyway. Okay, and we have to be in a situation where you constantly adapt to your circumstances and you live within your means. Okay, don't you try to boast a life that you do not have, or trying to don't get me wrong though, sometimes they talk about fake it until you make it. But if you're going to fake it until you make it and rack up thousands of dollars of debt on your credit card and you can't afford it, that's a very destructive method to do things. Okay, so when we talk about debt to income ratio, we are speaking about all the debt payments that go to student loans, auto loans, mortgages, rent, credit card payments, medical bills, personal loans, alimony, and child support. Okay, and the thing is, you want to lower your debt to income ratio. That's important, and you can do so by lowering your interest rate, extending your loan term, monitoring your spending. I've said this before. Okay, you want to live within your means. You also want to find a side hustle that can help you actually increase the income, right? Because this is important. You want to ask for higher limits if it's possible. Okay, when it comes to actually lowering your CUR. So you want to simultaneously lower your CUR, your credit utilization ratio, but also your debt to income ratio. When it comes to a credit utilization ratio, it's basically, you need to track how much you are charging to each card. Remember that you want to actually be below 30% or 35% maximum. Okay, so you want to ask for higher credit limits if possible. Okay, you want to set up balance alerts. You want to find out when your issuer reports to the credit bureaus, and it's very important to actually be strategic on how you use your credit card if you already have one. Okay, and bottom line is, the CUR, particularly credit utilization ratio, accounts for 30% of your FICO score. So this is really huge. This is not like peanuts. This is really huge. Okay, and when you add your payment history to your CUR, those two accounts for nearly 2/3 of your FICO score. Let's now talk about job search. You need to show the lender that you are actively searching for work. Okay, give your resume to your lender, for example. This is important. I mean, the whole idea is what? You want to project an image of somebody who's not a couch potato, a lazy ass. Okay, you are somebody who gets out there and look for jobs proactively. Very important. Okay, and you have to show that, hey, listen, if you want a job, because right now you don't have steady income, you want a job, ask your network for referrals. Ask around. Ask your friends and family to kind of hook you up. Yeah. It's fair. It's totally fine. Okay. And go to networking events, for example. Okay. I mean, you have a alumni network. If you went to college, you can contact the career. What I'm trying to say is that you have to think about a possibility where you are looking for work the right way. Okay. And this could be your career office at your alumni, for example. You can actually contact companies directly also. People do it all the time. You never know. If you're good at cold calling, because this requires some kind of cold calling though, because pick up the phone and call AT&T and say, listen, I just want to have a job. This requires some kind of guts. If you have this gut, just go ahead and do it. Use job search platforms also. Job search platforms, that will be really great. Go to job fairs. Yeah, you're looking for work, go to job fairs. Okay, you want to leverage social media. What I'm trying to tell you, boss, is that you want to tell the lender hey, listen, I have not been sleeping. I've been working hard to find a job. And here are reports about my job searches. Okay. Here are the companies I reached out to. Here are the times that I reached out to those companies respectively. And the whole thing, you have to really tell them that, hey, listen, you are actively looking. So it's really important. And you can even inquire at staffing agencies. Why not? Sign up with the staffing or recruitment agencies. They tend to have more, I would say, more jobs, and maybe you might qualify for the job that you need with steady income, right? That's really what it is, because the bottom line is you want to have a job, a 9 to 5 that is steady enough to actually help you buttress your financial situation and improve your net worth. The next thing I want to talk to you about is NPR. Okay. And this is very important. You want to build a relationship with the lender you want to get the loan from. Especially if you have bad credit and no steady income, it's very important to have that kind of relationship. It will help you a lot. You know why? Because maybe the loan rep, they are calling you on a first name basis. Okay. They have a clear idea about your financial situation. They probably know you when you had a steady income job, not now when you are in financial straits. Okay. Even now, you may not be in financial straits if you if you don't have no steady income, but you have one income during the year and they pay you $100,000, or so it's totally different depending on the field you're in. But the important thing about relationship banking is, and we have said this on other shows, is that the lender may offer you services and solutions. They might offer strategic advice based on your financial situation. They might help you with goal setting and investments, right? Because the whole thing is you want to actually buttress you want to solidify your future, right? So investments could actually help you a lot. They can also help you with wealth management. Wealth management is kind of cool if you have extra cash and you want to actually post it here. So you need to have a relationship with the bank where you want to apply. Okay, very important. And when I'm talking about relationship banking, I'm not talking about just transactional banking. I've said this on other shows. It's important to have transactional banking. Things like you want to deposit, you want to withdraw, you want to deposit, you want to withdraw, but that's not going to give you a high loan amount. Those are routine processes. Okay, you want to move on beyond that. Okay, and you want to constantly evaluate your banking needs, including your personal loan needs. Okay, and so the bottom line, you want to actually understand that it takes time to build a relationship. I'm speaking about a nonprofit relationship. I mean, not a nonprofit, but a mutually beneficial. Yeah, a mutually beneficial relationship that will help you down the road. And listen, sometimes when you actually are trying to establish a banking relationship, some folks might laugh. They might laugh at you, whatever. But it works. It definitely works. We have tried it. We have tried it over and over and over. It definitely worked. Works a lot. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are still having a conversation about personal loan with bad credit and no steady income. Okay, and I'm giving you a few hacks today to actually beef up your chances of being approved. Okay, now let's talk about the repayment. A repayment is very important. You need to set your budget and figure out how you will repay, because the lender doesn't really care about your financial situation. I mean, they do care about your financial situation, but if you're out of work, if you have a bad credit, okay, they might actually overlook those things if you have cash. because you have to prove to them that you are able to actually repay the loan. Okay. And if you want, you need to budget. Very important. You need to actually allocate loan payments to a portion of your budget. So calculate your monthly income, and you want to pick a budgeting method and monitor your progress. Okay. You can try the 50-30-20 rule as a simple budgeting framework, which allows you to do what? You allow up to 50% of your income for needs. You leave 30% of your income for wants, and you commit 20% of your income to savings and debt repayments. This is really good. So you are able to track and manage your budget through regular check-ins. Okay, very important. And the whole thing about the budgeting process is that it allows you to actually create a situation where you are able to boost your chances for being approved no matter what. And the thing is, again, when we talk about no steady income, it doesn't necessarily mean that you are in financial strait. It just means you don't have a steady income at the moment. That's what it is. Okay. But if you have the proper budget and you are able to actually track your budget, and you're able to see exactly what works and what doesn't, you'll be pleased fantastically to know, hey, listen, I'm losing money here. I'm actually making money here. It's just better for me to put more cash into this particular cluster, right? And that's what you want. You want to be in a situation where you are able to show the lender, hey, listen, I am able to repay you. Okay. And you can also, if you want to think about repayment, you can also have what we call a buddy system. In other words, you have a lot of folks in your, not a lot of folks, let's just say a group in your area where everybody is committed to actually repaying the loan or is committed to budgeting. That helps a lot, because if you feel like you have a group mindset, you're able to do more. At least that's what we have seen. Last but not the least, I want to talk to you about an important criterion. That's your FICO score. So when we talk about personal loan with bad credit and no steady income, we are speaking about a loan that allows you to actually apply and get massive loan amounts, but you got to take care of your FICO score. You need to maintain a decent FICO score at a minimum. Very important. I don't care. I'm going to repeat this. I've said this before. I don't care your financial situation. You need to have a way to monitor your credit score and improve it. Okay, check your credit reports for errors, for mistakes. Okay, you want to pay down any credit card debt you may have. This will help also bump up your credit score. When you check your credit reports, if there are mistakes, you want to find what? You want to file dispute letters. Very important. And also one thing you want to do is in terms of helping you increase your credit score, you want to also get a credit card if you don't already have one, because it's going to help you. A credit card is a great tool because it is a revolving line of credit that allows you to actually improve your FICO score over time. Very important. Okay. And get a credit card if you don't have one. A credit card will help you. And one thing I also want to say here is that you want to be in a situation where you can identify any negative items on your credit reports to make sure that you actually nip it in the bud, that you actually file dispute letters right away about it, so you are in a better position to actually get the loan that you need and deserve. Okay, this is very important. So when we talk about some negative items on your FICO reports, they take time to disappear. Okay, for example, Chapter 7 bankruptcy, you have 10 years. Chapter 13 bankruptcy, you have 7 years. Collection account, 7 years. Late payments, 7 years. And hard inquiries, 2 years. So you can see that those things take time, and you got to be in a position where you are constantly avoiding them, or you are able to know where to go. And my thing is, it always helps to check your FICO score. I would say weekly. Yeah, weekly is where the sweet spot is at. You don't have to do it every day. That'll be too much. Every 2 weeks, that's not really. I mean, it takes 5 minutes. It just takes 5 minutes to check your credit score. Okay, so that will help you a lot. And so and always trying to apply for a new credit sparingly. You want to generate, because when you apply for a new credit, you are generating hard inquiries. This is just what it is. Okay, you are reducing the average age of accounts. Okay. And so you are signaling that you are not desperate, because The goal here is what? The goal is to reduce your CUR and increase your FICO score. Okay. And last but not the least, you want to pay your bills on time, every time. Thank you so much for your attention, boss. I really appreciate it. In today's conversation, I was just talking to you about personal loan with bad credit and no steady income. How to convince a lender to approve you. Number 1, liquidity. Number 2, income sources. Number 3, DTI and CUR. Number 4, we have job search. Number 5, we have NPR. Number 6, we have repayment. And number 7, last but not the least, we have here the FICO score. Thank you so much for your attention. I appreciate it. I'll see you next time. But until then, remember, stay marvelous.